Hello, everyone. Today is Thursday, November 13, 2025. Update for Friday the 14th. All right, let's go. Well, not a great day in the portfolio. Obviously, not a great day in the market. We'll get to all that in just one second. Not much left in the portfolio. No setups going into tomorrow. Just not seeing a whole lot of setups. And one thing I was saying in the weekly charts today is the database just hasn't produced a whole lot. And usually when that happens, you have a bit of a now that we know why type of moment. And that's obviously with today's big sell off. And we'll get to that in just one second, but it is sort of self-regulating. Somebody was asking me a money management question, and they're saying, well, at 2% per position, once you get 10 or 20 or 30 positions, you've got this huge exposure. And the thing is, it's self-regulating. So as soon as the market gets a little choppy, a little iffy, you stop seeing setups. So you'll never see likely that many setups. And if you have, let's say, 10 in the portfolio, it means conditions have been really, really well, and most of those have hit the IPT. So back up the archives a few weeks, few months, and you'll see we had plenty stocks in the portfolio, and most of those had been making out the IPTs. Anyway, no need, again, to go after anything new at this juncture. Let things shake out a little bit. I am beginning to see a few shorts in the gold, so I just would like to throw that out. I don't suggest you run out and short them at this juncture. They're still in an uptrend, but we are beginning to see a few cracks within the golds themselves. So just keep an eye on that. And again, no new setups going into tomorrow. Let's take a look at the portfolio, what's left of it, and then we'll pop out to the overall market. KGC coming in a little bit, but it's been doing fairly well, obviously, as of late, trying to get back to its old highs. NUAI getting hit fairly hard. This one's got an HV of 311 now, so going to be hard to hold on to this one, but let's just see what happens. Hidden on your stop just in case. Somebody got reversal in TFPM, so coming in a little bit on that one. Let's take a look at the overall market, and then let's drill down a little. First of all, S&P 500 getting whacked pretty hard. Not the end of the world, and this is one thing I was saying earlier. I take a 30,000-foot view, and you can see it's just an inside day on a weekly chart, and longer-term uptrend certainly remains intact. So not to get too excited about just yet, but yes, we do want to pay attention. Potential kind of a minor head and shoulders in the works here. That would be a shoulder, a head, and then another shoulder. And the problem with this is the right shoulder is higher than the left, and that's a good thing if you're looking for technical analysis confirmation. You want that right shoulder to be higher. And I've learned that empirically over the years, and the way I wrap my head around it is everybody thinks we're going back to new highs here, and then when that stalls out, you get more people trapped on the wrong side of the market. But again, not the end of the world. Let's not read too much into this. One or two big updates obviously would erase that, but we do need to pay careful attention. NASDAQ, even worse than the Ps. We're well into this prior base, so that obviously is a bit of a bummer. On a net basis, we haven't made any progress since all the way back in October. That's a little bit of a concern too, early October, I should say. So we'll pay attention to the situation, and we'll take things one day at a time. Stop me if you heard that before. Russell 2000, bit of a bummer. Break it down toward the bottom, break it down out of the bottom of its range. Again, not the end of the world. As usual, follow through will be key, but if it gets below this range, then this becomes overhead supply. So obviously that is not a good thing. A lot of areas got whacked, as you would expect, like cybersecurity, and it's been kind of sideways as of late. Let's take a look at the semis. You can see they've pulled back to the prior breakout. They still look pretty good longer term. But obviously, when you pull back into your prior breakout levels, or when the market does, that's not a good thing. Metals and mining, again, as I would say, we now have an inflection point. If it takes out this pullback low, it could be in lots of trouble. Getting whacked pretty hard today, although lithium actually banged out all-time highs. I find that kind of interesting. Broker-dealer just recently tried to break out, then it came right back in. So yesterday, tried to break out. Today, nope, came right back in. That's just kind of a testament to the fact that breakouts can often fail, but obviously market conditions kind of help that along. Biotechnology actually was rallying earlier in spite of the overall market, but did reverse and close in the minus column. It's been on a tear as of late, so it still looks pretty good. Some areas like home builders still look pretty bad. You can see selling off hard. Looks like a top remains in place there. Healthcare kind of hanging in there, and also we'll take a look at major drugs hanging in there too. So those areas have really been on fire as of late. Medical devices will be another one that's still looking pretty good longer term. I think that's pretty much it for tonight. Let's see if the new sectors provide any opportunities. Let's see if the market stabilizes. And it's just trend following. There's a lot of let's see. Everybody have a great night. We'll talk to you tomorrow. Thank you so much.